what happens when the Fed starts cutting interest rates and why it matters to you. Are you ready? So, the Fed just cut interest rates, or maybe they're about to. What does that actually mean for your money, your investments, and the economy? Is this a green light for the stock market? A warning sign of trouble ahead? Well, in this video, I'm breaking down exactly what happens when the Feds cut the rates, how it impacts you as a trader or investor, and why the markets react the way that they do. But before we jump in, grab your free macro cheat sheet at iteachstocks.com so you can follow the Fed moves like a pro and trade with much more confidence. Ready? 1. What is a rate cut? What does it mean? When the Federal Reserve's cut interest rates, it makes borrowing cheaper across the board. That affects credit cards, car loans, business loans, and even mortgages. The goal? To stimulate spending, borrowing, and investing, right? Especially during economic slowdowns or recessions. Less interest equals more money in circulation equals more economic activity. 2. How markets react. Stocks typically rise when the Feds cut rates, especially growth in tech stocks. Why? Because lower rates mean lower borrowing costs and higher future earnings get discounted less. Bonds may see falling yields, but longer dated treasuries can spike if markets expect a full-blown recession. Gold and crypto often move higher too. Investors chase assets with higher potential returns when cash pays less. But here's the catch. You ready? If rate cuts are seen as a response to serious economic trouble, it could spook the investors. 3. Impact on the real economy. Rate cuts lower mortgages rates, which can boost home buying. Businesses take out loans more cheaply, which can increase hiring and production. Consumers spend more because financing is easier. But if inflation is still high, rate cuts can reignite price pressures, causing more long-term problems. Ready? 4. The why behind the cut matters. A rate cut because inflation is under control and growth is cooling, markets love it. A rate cut because we are slipping into a recession, that's a warning flag. It's not just what the Fed does, it's why they are doing it. You got that? Why they are doing it. So, when the Fed starts cutting rates, it's not just a number change, it's a signal to traders, investors, and consumers about where the economy is heading. If you want to trade smarter around Fed decisions, grab our free macro traders playbook at iteachstocks.com. We break down rate moves, CPI data, and key trading strategies, and you can use around the Fed announcements. Ready? Comment below, how do you trade around the Fed meetings? I want to hear it. Smash that like button, hit subscribe, and ring the bell for more clear, no BS financial breakdowns every week. Thanks for watching and happy trading.